Hi, Mark Schleivens with Property Resources, where we do one thing: we sell buildings. Over the last 3 to 4 weeks, we've had a very large number of calls from tenants asking us if they should consider buying their own building. And I'm trying to answer that question, but remember, you're talking to somebody that sells buildings for a living, so if you ask me, is it a good time to buy, I favor the answer yes, just being realistic. But let's really look at the situation, because ultimately what it's about is it the right time for you to buy. But let's talk about the market as a whole and some of the primary factors that you may want to pay attention to that will contribute to whether or not you want to make this decision. First of all, look at the market conditions. Only a year ago in January, all of us here at Property Resources were predicting a troublesome year. Markets were hot, we were wondering about inflation, and there was no product. Office buildings all across town were really full, single-digit vacancy. And we wondered what our year was going to look like. But then no sooner we moved into March, and we thought, well, we're going to be staring at a significant recession and a lot of vacancy. We were wrong on that prediction. What has happened? We have a vibrant economy, but yes, vacancy is increasing. There is still a lot of office tenants having not made a final decision whether or not they want to move back into the building that they're currently renting. So we're going to probably see more and more vacancy in office space. We're already seeing some of it. As that vacancy occurs, different people that own buildings get frustrated and say, maybe this is a good time to sell. You want more supply if you're a buyer. If you're a seller, you want less supply. Bottom line is there's more supply. The big issue with real estate is the debt side of the equation. So one of the things everyone's asking us is, where are loans? Because they've heard all this residential feedback, 2-3% loans. The bottom line right now, the banks are lending money at 3.5 to 3.65%. We're seeing loans in that range frequently, and oftentimes year one is interest only, which really helps people get on square footing when they buy a property. So banks are getting really aggressive. We've seen deals with as little as 10% down. Not a lot of deals. We're seeing plenty of deals at 15% down and a myriad of transactions at 20% down. So if you're struggling with how much equity you want to contribute to buying a building, I would consider 15%, but we might be able to do better. And in some of our future videos, we're going to talk to you about how to get a bank loan, because a lot of people aren't very good at it. The biggest question that everyone's trying to get to: is it cheaper to own? When you're borrowing money at 3.5% and the buildings are still selling way below what it would cost to reproduce them, yes, this is a great time to buy. We got inexpensive money, we got properties trading below replacement cost, so yes, this is a good time to buy. Can we find you the right building? All I can say about that is the earlier you start relative to your lease expiration, the higher chances you'll have of finding the right building for you and your business. Please tune in. We're going to have some more videos about some of these topics. We're going to go a little bit deeper, and thank you for your time.